Hi everyone, this is Peter speaking from the UK. I'm here with Tom. If you can hear me loud and clear, or if you can hear me at all, please type in something. Oh yes, Happy New Year to you, Jack. Hi Gregory, Krista, Mark. Good, fantastic. Happy New Year to all of you. So we'll be starting in about 5 minutes with Tom Williams's Friday session. So please stand by. Happy New Year to everybody, and thank you for all your well wishes for this year for us. So I started the recording. Tom's here, of course, and Rita's here, and also we've got Delia Leck, who helps Tom, and she's sitting here listening in. Delia's not a trader, at least not yet, but she's likes to watch and listen. So with that, I'll hand you straight over to Tom. Just check the recording. Yeah, okay. Tom.
Thank you for that, Peter. Yes, Tom Williams here. I'm speaking to you from Worthing, Sussex. As you all know, it's a little resort town on the south coast of England. It's about 40, 50 miles south of London. The weather's not too bad. At least it's nothing like you hear the weather in America. Right, so we've got a chart up of the S&P 500 cash market. This is a 30-minute chart. Now, there's no reason why I've got 30 minutes up. You could put any time frame up, more or less, and you can read. And it certainly looks, from the opening of America, they pulled a plug on you, or pulled a plug on the market. and all these red down bars. Now, before the market, I'll notice here, look, we've got, okay. Can you see the screen? Right, okay, so we've got several signals right at the top of the market, which will warned you. What's that say, Pete? Supply coming in. Read the dialog boxes, please. There's a lot of information there. Just click on that sidebar and you can run it down. There's a lot of information there for you. On the very next bar, there's another one. And right at the top, there's another one. So you can't say you weren't warned. Hour and a half, it's given you notice to be cautious. Now, of course, when you see these up moves like this, like this, look, with these blue bars, that up move started from here, of course. This is what we call a setup. Here, you get down bars, and you see the stopping volume coming in. Down here, look, very high volume. Don't forget, volume is activity. And so you know there's a lot of activity. But you don't go long on that. You now want confirmation. And you usually, practically all the time, this is what happens. It goes up a few bars, runs out of a bit of steam, nothing exciting happening, but then it comes back down to this level where you first saw, when I've lost it. Oh. I don't know what's happened here. Hang on. I was just showing the setup here, look, on the low. This was yesterday. So there's a stopping volume, right? So you don't go long on that. You only go long when it's confirmed. And lo and behold, that black bar, look, it would have been nice. You can't expect these setups to do exactly what you want. You know, it could have been a little bit lower, perhaps, a little bit. But that's definitely a test, look. When you see a black bar, it's colored black because it's level, right? When you see a down bar like that, yeah, the signal telling you it's a test, right? It's testing. What is testing? Is the amount of supply. And it's this supply that will stop the market going up. And so they test, look. And when you look at the volume, the low, it's low. And that's why signal appeared. That's a classic. If you were writing a book, this is the example you'd use. Right here, look. Beautiful. And then they mark it up, look. Right. And then they've got full control of this market. Look at the moment. And you can see by these blue bars how it goes up, look. They're in full control here. Full control. And then you've got 3 warning signals. Incidentally, we were looking at the daily chart before we started. And I said to Peter, well, to me, that's got everything. Look, it's got no demand. It's got a bit of support, a bit of supply. It's got everything in it. That no demand last bar yesterday. So that you're warned here. It's gone up. Whenever you see those blue bars like that, it means the professional side of the market are in full control of the market. And they're waiting for the opening of America to pull the plug on you. Whether it's, we don't listen to the news, but there's probably some bad news, who knows. And then they pull the plug, bang. Okay, so it falls, whipsawing. Right, now what I have noticed here on this red down bar, look, here, the pressure seems to have gone off the market. The volume or activity is low. You are lower than this area, admittedly, but that means that they might possibly be hoping for some sort of 50% retracement even. But we've yet to see any really positive sign of a top. We've had the market crawling up for days on end, weeks on end really, becoming overbought, looks very tired, nothing really much happening. It keeps going up. People speculate it's going to fall any minute, but it keeps holding. That is normally a classic sign of weakness, but for real weakness, you need to see up bars on very high volume, or an up bar and a narrow spread with very high volume at the end of a rising market. We haven't actually seen that yet. And because the market is so cunning and devious, excuse me, it could throw you off. So even though you see these falls like this today, you still have to be very cautious in your view of the market. Now, as I say, right here, look, there is little or no supply. Red down bar, which means there's no pressure on the market. It's even closed near the high, look. And the volume has dropped off, or activity. There is no activity. So are we going to get some sort of retracement? Now, please, any questions? Rita's here. Peter's here, ready to pick them all up. And it would certainly help me, because I like answering questions.
If you've got any charts you want Tom to look at, please type them into the question box. Eleni has asked for cotton, Peter. Can you put cotton up?
Yeah, is this a daily? Yes, it's cotton. I never really follow cotton as such. See, you'll find the professional traders, they tend to specialize in one or two vehicles. Like you get a cotton trader, he's certainly not going to trade wheat or anything. So they know every little move it makes. You know what's going on. To me, there's nothing jumps out. To me, there's no information leaks out at me here. You've got a bit of a shakeout here, look. A down bar. That looks sort of a bit like a test. There's no really serious weakness I can see. It's a very mundane sort of chart, seems to be going sideways. We don't have a weekly of this, do we? Yeah. A weekly one might be more. Don't be frightened to look at different time frames, especially with some of these commodities. Oh, that's better. I think, personally, it would be, if I was forced to make an opinion, I'd rather be short than long, but right at that stage, I wouldn't consider doing anything with this at the moment. There's nothing obvious sticking out here to me. Okay.
TLT. Okay, thanks, Tom. So Julius has asked for a daily chart of TLT. What is TLT, Julius? Can you tell us? Is it stock? If so, which one? Bond ETF, Tom.
Right, it's certainly been oscillating up and down, hasn't it? You could draw trend lines here, Peter. Two highs from the first low. Very often trend lines are very, very good. In the down movement, first two highs, first low, that's it. It gives you an idea, like it's sort of a bit of a map where if you're going. Well, that's all right, because even if it doesn't fall the market here to the trend line, I mean, that's telling you something anyway. It's telling you that there is some strength in there, and that's why it's reluctant to fall to this lower trend line. And you can see that you're obviously overbought here. And lo and behold, this suspiciously looks like a test. It's that black bar again. That means the color black because it's closing where it opened. But the thing is, the volume is quite high. Look. And the volume is high. Look, another red down bar. I think there's weakness in this chart, and it's very likely to fall off. Okay.
Okay, can you put TSLA? Okay, so YF would like TSLA. I assume you mean the daily chart. We'll put the daily chart up first. We've only got daily anyway. So TSLA, Tom. Yes. What is TSLA, YF? Sorry. Tom's asking, what is it? What stock is it? Or Tesla. Tesla electric cars, Tom.
Electric cars. Interesting. I mean, from a selection point of view, it's not acting strong or as strong as the index look. It looks to have been a bit of a shakeout here. There appears to be no demand there, look. But they've gapped it up, which isn't a really great sign when they gap these things up like that. Don't forget, you've got these stock specialists handling these things on the floor of the New York Stock Exchange. And they'll whipsaw this thing around as much as they can. They're making money for themselves. To me, this looks as if it wants to continue going sideways. Unless you put a weekly up, Peter. Very often these stocks look, they're far clearer when you can see a weekly, that's it. Yeah. Can't get the cursor to work, why is that? Oh, there it is. Right, so we've had a down move there, look. Looks like some stopping volume came in there, look. It's going up on no demand here. It's drifting up. There's nothing exciting there. The only possible excitement I could see would be if it fell back down to the level of the first supply, or in the area where the supply was there, so somewhere like that. If that stock came down and hit that level, it's the level that's important, especially if it was a test. Now we've seen two tests, those black bars that we showed you on those previous charts, then that will go up. But it's nothing all that obvious at the moment. I don't like these bars in the background that have what we call a top tail. That's usually an indication of weakness, because during the day that's been marked up and it's hit supply or no demand. It could easily be, and it's not acting as strong as the index. So you need a stock that's acting as strong as the index, or showing some movement when the index moves.
Okay. Okay. I'm going to try and bring up currency. The CAD versus the CHF. It's not there, is it? Hello, we're just going to try and put up the Canadian dollar against the Swiss franc for Paul. I'm just going to see. We're working it out. All right. Okay. We haven't got the data. I'm sorry, Paul. We haven't got the data for that. We've got the, we've got, what have we got? A Canadian. If you know the e-signal code, Paul, for one of the futures for that pair, then we can put that up. In the meantime, Christian would like AA, Peter. AA. All right, Tom?
20 bars out. Yeah, there's a lot of volume there at the end. Is that 20 bars? Right, okay, so we've seen a nice run up, look. Okay, nothing wrong with that. We've seen quite a few red arrows appearing up here, warning us of something or other. Okay. That looks like a test, which normally means they potentially could still be bullish when they test like that. Test, yeah. So you all know what a test looks like. On that test, it went sideways. There's not a lot of selling pressure on these red down bars, but there is supply on these last two bars, and that's not healthy, definitely not. Supply coming in. And it's supply that stops these stocks going up. If you're trading longer term, then of course you use weekly or even monthly charts.
Well, actually, NME is saying weekly and monthly tell the story. Should we put one up?
Yes.
So this one.
That's weekly.
Right. Right, okay, we've got a little bit of sign of weakness here. Right, but this is a weekly chart, so we're way back. That looks like a test. There's not too much volume there. It's shot up though, on a little bit of no demand. It's still trying to go up, look. And it's acting as strong as the index. So that's not a bad looking stock for the long side of the market, although weakness has creeped in these last few bars.
We're just going to put up this Canadian dollar. You ready? 6C hash F. And then it says here C dollar sign. I don't know if that's right.
C dollar.
Yeah. Okay, though that's not working. 6C hash F. That's it. Yeah. F.
Well, that's the US dollar showing.
No, sorry, what is
It
that?
must be, because, well, it was supposed to be against the
It's been forward for some time, look.
Stand by, folks. We're discussing what it is, actually.
Yeah.
It's been forward for a long time.
No, that's the Canadian dollar against the US dollar. So
Yes.
what is the code?
So that's the
So Paul is saying CAD, CHF, AO, FX. Try that.
Well, this is a good
Yeah.
chart.
Let's look at that chart.
Okay. Right.
Well, this,
So while we're here, we'll just look at this chart first. Hang on.
so there's the daily chart of the Canadian dollar against the US dollar. Well, it's obviously looking very, very weak, isn't it? And there's no stopping volume as such. A little bits come in here, but not a lot. To stop a down move like that, we need substantial stopping volume coming in. Little bit, look. And that's a narrow spread, so there's a little bit there. So there's a little bit of support there. And that bar's begin to look a bit strong. When they plummet down like that, I need to close in the middle. With the volume fairly high, that shows that they are buying that dollar at the moment. But it's far, far too early to jump in and go long on that. Okay.
Mark actually says his symbol he has on his chart says bag holding for yesterday. Yesterday, he says. It says potential stopping volume for us. What charting package are you using, Mark? And your data provider? Oh, last year. RTV dollar. Okay. Oh, Tom.
Well, it could be. I mean, those two last signals on that chart there could be described as bag holding in a way. All bag holding means is that there's a certain amount of volume or activities arrived. The spread has narrowed as it plummeted down with falls behind you. That's quite possible, that is true. But it's not as obvious as I'd like it. The real bag holding signal I like to see is when it plummets down into fresh low ground, even gap down. The spread is very narrow, the volume is very high, and that's true bag hold. You should always go in when you see that. But this looks like a bit of stopping volume now, which is quite understandable with these falls that we've seen like this. Peter, you could draw a trend line between these highs and that. First low. Yeah, so we're obviously oversold. We're well below the trend line, look. So the market is vulnerable to some buying when that happens. Nothing absolutely conclusive to me. It looks as if it would like to go up. But if you see it go up a few bars and then fall back down into that level where that volume came in, then it's a different story. That would be what we call a setup. And that would definitely indicate higher prices.
CAD, CHF, AO, FX.
So I think now we're going to have a go at putting up the Canadian dollar versus, was it the Swiss franc or something? So what have we got? CAD. No, that's not it. One with the AO in it. Or is it?
Yeah, well this is what it says. CAD, CHF, space, AO.
Space A0 minus FX, is it? Comma, day. No. I'm just suspicious about the CAD CHF format. It's A0, yeah. So we're talking amongst ourselves really, aren't we? Anybody got any other ideas for that one? I mean, I think, yeah, we've got e-signal here. Maybe we don't have the data then. We're not privy to what data. Daily for the euro, okay. Right, so here's the euro versus the American dollar.
So that's the euro. With the other sign of weakness right here. So we have a hell of a sign of weakness up there. Right there, that's king size up thrust.
No signal on it.
I'm surprised there's not a signal on it. Oh. Well, that's an up thrust, definitely. You shouldn't need a signal to see that. You should automatically shoot out at you alive. And the next bar, although it's up, see the no demand doesn't come in until here, look. So it's definitely a weakness there. Whenever you see that, you know that euro's coming off. And then when you see these no demand up bars, then it's widespread down to catch as many traders on the wrong side of the trade as possible. Plummets down, well, keeps falling down. There's a little bit of support coming, not a lot. That's And that looks like weakness. That last bar, look, is not bar on no demand, closing just off the highs. This is not the sort of vehicle you want to be long in. And is there enough evidence for being short? I don't know. I would certainly short the euro if I saw that. Okay.
So we're being asked to show the 4-hour chart for that. Now we don't have the 4-hour of that cash, or whatever you want to call it. We've got the future though. We can do 4 hours. Currency futures. Is it E? 4 hours. So the question is the last bar weakness? Tom went yes.
Markets don't like ultra high volume on up bars, and that's certainly endeavoring to shoot up there, look, and the volume is very, very high. Now the only time that's acceptable is if it's pushing through supply to the top. But is it? Eh? Go on then. Yeah, but how far back is that? Yeah. That's the only possible excuse for very, very high volume. Put 20 bars back up. Of high volume in that bar is that they're absorbing traders from these whole highs. As these markets go sideways and start whipsawing up and down, there will be many, many thousands of traders in these little tops here and all around here. And their main concern is to get out. Now, professional money know that, and that's why they've got it up through there, hopefully, to persuade these people, look, got higher prices now, there's no need to sell. They don't want to buy off you at higher prices. Now, the only way you can confirm that is as usually followed by a test of some sort. A test. If you see a red Dow bar, what time is this? A daily? 4 hour. Oh, 4 hour. If you see a down bar now somewhere along here, and the volume is low, then that's what that is, absorbent volume. Failing that, that's weakness.
Okay, so Louis would like to see the pound and dollar pair. Yes.
Right, daily future pound with that. I mean, that there was a shakeout. So they were trying to push it up. But overall, it is trending up, look. The trend lines show you that. And that's the shakeout come test. There's a lot of no demand here. And that sort of bar there, it's gone to the low but closed up near the high. So it's not exactly a weak bar there. So that pound could easily go up somewhat. Okay.
Okay, so Lance would like you to look at BWY, Tom. Which exchange is that on, Lance? Because we're having trouble. Oh, it's a FTSE. We don't have data for the FTSE, I'm afraid. Sorry about that. Pat would like BBRY.
Can you put 20 up?
Yeah.
Oh, that's 20, is it? Well, it's certainly acting as strong as the index, isn't it? Which is a plus sign. Looks like a red down bar here, test. In fact, several of them, look. Here. What they're doing, they're testing this gap up through the supply to the top. This is what I mean by testing. High volume on up bar, right, as it pushes up through old tops to the left, is acceptable when you see a test. Well, there's the first test. There's the second test. There's even the third test, all on slightly higher prices, look. And they're all on low volume. That stock is acting as strong as the index. But because the index itself is very negative, right, it's showing supply on some of these stocks. There's another one. Supply, is it?
Yeah, same thing.
So you've got two red arrows there. As I always say to Gavin, you know, ignore the signals at your peril. Because sometimes chart readers, they get a little bit cocky and they say, oh, I don't need signals to read this. I can do this on my own, which is all very well. But don't forget, these signals, they wouldn't be there unless it meant something was happening. It's as simple as that. They don't just appear. They were created in the cold light of day, shall we say, cold, you know, when there was nobody trading and they were just thinking about the principle. And that's why it's there. And that's why I always say to people, we can almost more or less prove what we tell you is the truth, because computers do not understand flaws in your thinking, flaws in your logic, mistakes in your thinking. They just don't want to know. You've either got it right or you haven't, otherwise it just looks stupid. Okay?
Listen to this, Tom's question. Colin's asking, Tom, earlier you said you had been looking at the ES daily chart before this session began, and you made the comment that yesterday's daily bar contained a bit of everything. Can you elaborate on this?
Can we get less bars up somehow?
Yeah.
This is a daily chart, look. Now we've seen the market move sideways here, look. Right, it's going sideways really on no demand, not a great deal of selling. When it marked down, there's not a great deal of selling going on. Right, that could easily indicate that they're supporting the market to distribute as much as possible. Now this last bar here, look, it's a blue up bar. That was yesterday, went up. right? But the volume is not exactly low, it's not high either. That's very mundane. And on that mundane volume, it closed almost in the middle, look. It's crawling up, so it's not really showing a great deal either way. There's nothing, see, some of the days you see on this daily chart, you could say, right, definitely it's coming off, or definitely it's going up, look. But this is a nondescript kind of bar, right? They're obviously holding it up, supporting the market somewhat. It's on that upper trend line, so you are overbought. So that's what I meant by what I said there.
Okay, so Park's asking for NFLX, which is Netflix, the live streaming movies. It's on the NASDAQ. You go down. There you go. So that
a company called Netflix. They supply online movies.
Well, I mean, it's obviously acting weak on the index, so it's not a good positive indication to buy this. A little bit of stopping volumes come in here, look, on this last bar.
potential climactic action.
Yes, well, that's because it's more or less gap down. The volume has increased quite high. Next bar's up. But even so, this will fall into a category is if you're looking to go long on this, right, you're looking for a VSA principle. Now, you've seen the high volume here. So what you'd expect to see is 1, 2, 3 or 4, 5 up bars, and then start falling back down to this level. Look, I'll draw a line across there. Right. Where that high volume is. Can't quite see it, right? Is that right? So the market, if the market falls back down to that, it's the level that's important. And if that volume is very low, then that will go up. But right now, there's too many negative things there. The gap down isn't exactly a sign of strength. It's actually weaker than the index. And you've got a down move right behind you. You've got a green arrow here, admittedly, but it's probably followed by no demand somewhere. See that there? That's it. There. So you've got to watch that. So that doesn't mean anything at the moment. They may be buying, but to see if they are buying, you have to wait for confirmation. And that is, I don't know how long you have to wait because it varies. If they're dead keen on the thing, it should happen fairly quickly. Go sideways 3 or 4 or 5 bars and then fall off back down into that level. If it drops to that level and the volume is low, then it's going to go up.
Tom, this stock's on the NASDAQ. Christian's asking, can VSA be applied to a NASDAQ stock accurately?
Yeah, why shouldn't it be? Why shouldn't VSA be applied to a NASDAQ stock? Don't forget, VSA, you're reading the market by looking at the amount of activity, and on that activity, what's the price spread done? Now, it doesn't matter what stock it is, they all work the same way. So it has to work. And it certainly works on NASDAQ because I've seen it. There's nothing there that's different. The NASDAQ stock doesn't contain anything different in principle than the Dow or the S&P 500 or even the FTSE. Market moves on supply and demand. And you can analyze that, hopefully, by looking at the activity and the price spread. So there's no reason why it shouldn't act on what doesn't work on the NASDAQ.
Christian is saying, is it better... Christian's saying, is it better for NYSE or NASDAQ? They're all the same, Tom is saying. They're all the same. You don't need to reason it or wonder why or think round it. They're all the same. Just read the charts. The whole story, all the information that you need is in the chart. That's it. Do you want to say something, Tom, on that? No. Peter is asking, CL, which we do believe is that's oil, is it? I don't know, CL, crude oil. Tom, can you...
You say the price of petrol is going to fall. You'll be lucky. You'll be lucky. Well, this crude oil has definitely fallen off, look. But you won't see that in lower prices in the pumps. They make sure of that. There's weakness right at the top, look. Supply. Right. So we expect that. Right. So widespread down, close near the low on increase in volume is not stopping volume. The reason it's not stopping volume, it hasn't fallen enough. So you must remember that to attract professional money into a vehicle, be it oil or anything, the fall has to be there to attract them. It's like if the guy over the road wants to sell his house and he tells you, oh, I'll take a 5% drop. You may not be interested. But you would be if he suddenly said, I might take a 50% drop or like that. Then you'd be interested. Professional money is the same. They like to see a substantial fall before stopping volume comes in. Now, so that means that when you see widespread down like that, close near the low, on increase in volume, as it pushes down through supply, support to the left is weakness. Not strength, it's weakness. And there's no indication here of any stopping volume at all, look. That market looks weak. So let's hope we get lower petrol prices.
So in the UK, Tony says of each pound that you put in your tank, 70 to 80p will go to HMT. You mean the tax man? Anyway, absolutely correct. Pete, now there are a few questions on silver, SLV, and also Mark is saying silver is up today. Are we close to breaking out to the upside, Tom? Oh, Her Majesty's Treasury says yes, correct. There's something wrong there, isn't there? Go. This is a continuous contract, isn't it? Silver. Do you want to say that?
Yeah, we just put up SLV. Didn't look very pretty, did it? That's an ETF, I think, of silver. But we've got the silver contract instead. It looks a bit more sensible.
Well, silver, I try to keep away from these sort of commodities where all these amateurs are in there distorting the picture. I mean, it's obviously going sideways, look. You could draw a trend line through those two highs and the low here, or that low, perhaps. This has been an artificial low, this. And here, and one of these lows there. That's all right. So, see how wonderful trend lines are. It gives you an idea of which way this market is going. It's obviously, we've ignored this here because this is an artificial low. This is a shakeout here. Right, you're endeavoring to push that up. And you can see it's got a slow trend up. What was the question originally, Rita?
Are we close to breaking out to the upside?
No, we're not. No, we're not close to anything. I would have thought here. It is drifting up though. There's nothing all that obvious to say you could go long or short on this. It's drifting up, look, slowly. It's going sideways, whipsawing sideways.
So, Mark, can I speak in the thing? Okay, Mark, yes, thanks. The code that you've put up there for eSignal, we don't get that data, I'm afraid. But Mark is saying, so I'll show you, Tom, on this chart, $20.23. So he's saying today it's up to sort of about, you know, up here at the moment. So do you want to speak? Yeah.
Well, if silver's gone up, it's because of this shakeout in the background. This. You can always go long when you see these if you can get in. Like that. But then you get whipsawed something terrible all the time on these vehicles. Right. If it's gone up, it's not going to break out, I wouldn't have thought. And you could easily be sucked in and misled here and get sucked into a thing that's just chopping sideways all the time. In the end, they'll get you.
Okay, Paul is asking, can selling climaxes be substituted for stopping volume, as sometimes there is no stopping volume on higher time frames? Does that make sense to you?
Sorry, what was the question, Rita?
Can selling climaxes be substituted for stopping volume, as sometimes there is no stopping volume on higher time frames?
Well, it's either there or isn't there. If you've got high volume appearing over the weekly or whatever, if that's on up bar and the spread is narrow, that's weakness. Now the computer might think it's a buying climax or selling climax. Of course, stopping volume is on the way down, isn't it, at the bottom? All you're trying to detect, so don't forget, stopping volume, climaxes, supply overcoming demand, all this sort of stuff, demand overcoming supply, I mean, all means that you're trying to detect professional money stepping into the market. They bully their way in with huge amounts, and that alters the balance of supply and demand for that moment. and they hold that position, and then they can force the market up at a later date. But there's nothing like substitution going on at all. It's either there or isn't. But it may have different name tags to it.
Okay, this will be our last one because we're running out of time. The YM, here I'll put it up, YM 15 minutes for Grigory. Can you comment on this, Tom? This is the Dow. It's the 15-minute chart.
Hello, Gregory. Gregory. Right. How's the weather treating you in Moscow? I saw pictures today of Niagara Falls and America's frozen over. It's all ice. Amazing, isn't it?
He says hi. He says weather is bad, +8.
Oh, +8. Anyway, it's a very great pleasure to meet you when you came over to England. Now this is the Dow. This will run in harmony with the S&P 500 and the NASDAQ. And there is a certain amount of stopping volume appeared here, look. Right, it did go sideways, came down. Right, back into that level, look. And there wasn't a lot of supply there. That's why it tends to have drifted up, look. They seem to be supporting this market, and that, but I don't like this in the background, look. I don't like this, these bars with these top tails to them. That's not a healthy sign. And if the market was bullish, they wouldn't take so long, and they would have surely responded here quite rapidly, because these down bars are narrow spreads, little or no volume for selling pressure. Well, there was some stopping volume there. So the principle's there, but it hasn't responded very well. And it's not responding because the market is basically weak. Okay?
Okay, thanks, Tom. So that's it, folks. Thank you very much for coming along. We're doing a newsletter, are we, Tom, this week? Yeah. Sunday, I think, we're doing a newsletter which will appear via the VSA Club. Anything else to say, Tom?
No.
Have a good weekend. Yeah, keep warm. And Rita? No. So that's it, folks. So we'll see you all next week, hopefully. And in the meantime, have a good weekend and week.